Oh boy, do we have a lot to break down in this video, guys. Holy crap. We had Microsoft report today, Google, Visa, the list goes on. We have a lot of earnings to break down. And of course, we have to break down the markets, which did not do well whatsoever today. We got to break down charts, the markets, what I'm doing. But before we do that, you guys know what I'm about to say. Get your free money from Moomoo. Up to 6 stocks, each up to $3,500. I'm telling you guys, it is free money. Just use that link down below. Deposit at least $100, and again, you get up to 6 free stocks. Just use that link. And with that being said, let's dive into the video. So it was an absolute bloodbath today, guys. First and foremost, the VIX went up over 24% on the day. We had the Russell down, and mind you guys, if you see the VIX up 20+%, you know it is just a disaster out there. We had the Russell down 3.3%, the NASDAQ 100 down 3.4, or actually no, not 3.4, 3.9. It actually went down over 4% in the aftermarket hours, which we'll talk about that in a couple of minutes here. We had the S&P close down 2.8% as the Dow Jones went down 2.4%. And again, the VIX went up about 24%. We had gold up 0.1%, and we had silver up 0.3%, which I guess that's good that we saw the metals turn around and close green today, considering yesterday the metals did not do well at all, if you guys remember that. Or maybe that was on Friday. No, actually, no, that was yesterday. We had gold and silver down about 2% a pop, which is not good whatsoever for a single day of trading, right? So very, very rough day out there, very bloody market. And what we're noticing here is Triple Q, which tracks the NASDAQ 100. You guys should know that at this point. This ended up taking out the lows from a couple of weeks ago, which were right around $315. We took those lows out not during the day today, and mind you, we closed at 317 today, but we took them out after market hours. Look at this, guys. Triple Q went down all the way to $311 after market hours, meaning on the day today, it must have gone down close to 5%, which is unbelievable. If you take yesterday's closing price to where we ended up going today after market hours, let's see here. Yesterday we closed at about 329.50, and we went all the way down to 311. This thing went down 5.5% in just 24 hours. Think about that, 5.5% since yesterday at the bell, closing bell, which is just ridiculous. So QQQ is getting destroyed, took the lows out, and I'm not seeing any signs of a relief rally quite yet. We're just not seeing anything. We're still downtrending on the 20-day chart, the 10-day chart, the 5-day chart. Literally all these time frames are pointing towards the bears being in charge and the bulls not getting any sign or not getting any momentum whatsoever at this point. So what a day, guys. And SPY, let's see if that took the low out. I don't think it did. Let's see here. We hit 413 after market hours after closing at 416. So it dropped about $3 after market hours. We're noticing SPY did not take the lows out on the 4-hour chart. The low was 410 back on the 23rd, 24th of February, and we just hit about 413, like I said. So we got about $3 away from the lows. That's pretty dang close, but not quite yet. So for tomorrow, for later this week, guys, I'm going to be watching SPY at 410 to 415, essentially exactly where we are right now. Actually, now we're a little bit above 415. We are up a little bit in the aftermarket, considering we closed at 416.10. Now we're at 416.78. So these markets, as you all can see, they dumped after we got earnings for Microsoft and Google. They initially dumped those two stocks, Microsoft and Google, and that's why the market's dumped. And now we're starting to get the rebound because last I checked, Google is rebounding quite aggressively itself, and I think Microsoft might be doing that as well. So let's talk about these stocks. We have a couple of other ones as well, other than Microsoft, Google, Visa. There's a couple of other ones. So make sure you guys stick on throughout. Let's talk about what they did, numbers, growth, all that good stuff. And by the way, guys, if you're finding value in this video thus far, make sure to hit the like button and subscribe. We're super close. I think 60 subscribers away from 25,000, which is super freaking close. So let's get that number. That is a big milestone. I appreciate all of you guys as always. Now let's talk about these earnings. Microsoft is number one, which again, I think it dumped. Oh my goodness. look at this. I didn't realize how aggressively it went up. This thing closed at 270. It went down to 259, like I said, that initial dump, and now it's at 289. Oh my goodness, guys. What is going on? This thing went up 10% from 259 to 289 just in the aftermarket hours in the past 2 hours as I am filming this at about 6:30 p.m. So big move on Microsoft. That's got to be guidance, guys. That's got to be guidance. First, before we even talk about that, let's see what exactly they did. They did EPS of $2.22 versus the $2.20 estimate, so they ended up beating on EPS, and they beat on revenue, $49.4 billion versus $49.03 billion estimated, so nice double beat, and they also returned about $12.4 billion to shareholders in dividends and in buybacks in the quarter, which is fantastic if you like dividends and you like your companies buying back their own shares, which who doesn't? That's a good sign right there. They had LinkedIn revenue up 34%, Surface revenue up 13%, Azure and other cloud services, if I could talk today, guys, up 46%. So pretty nice growth, exceptional growth out of Azure and the other cloud services. And I'm not seeing anything on guidance in my notes here because I think when I wrote these notes down, guidance wasn't out yet, but it's got to be out now that we're getting this big stock price, the big pump right now. What's going on? Stock jumps after strong forecast. That's got to be it. That's got to be it, guys. Let's see here. So here it is. I'm reading that they guided up on certain segments of the business here. Let's see here. Microsoft Chief CFO Amy Hood guided for software sales of $16.65 billion to $16.9 billion, while the analysts were expecting $16.68 billion. So that's a nice guide up. Looks like here we have an analyst writing that they have a buy rating and a $400 price target. So it looks like upbeat sales guidance for certain segments. That is what's moving the stock up. And now we're at a point where we're right back towards $300, which we're not out of the woods quite yet, guys. If you take a look here on the 4-hour chart, we are still under the 180 moving average, which for the most part over the past couple of months, we've been under that point. So we're still under it, meaning we got to break out of it. And until then, we're not out of the woods yet. So I'm just going to put my alert at 300. Let's just put it at a round number, $300. Mark is at or above, and we'll see what Microsoft ends up doing from there moving forward. And full disclosure, I do not own Microsoft right now. I don't own it right now, but who knows? Maybe as a trade, I'd consider it if we start getting a move towards 300 and 300 plus especially. So the next one, which I probably should have talked about first, but we're going to keep it for the second spot in this video, guys. It is Google, which is my largest long-term position. And this company, like Microsoft, it tanked once the numbers came out. And they missed on EPS. I'm not going to lie, guys. That is not great. I mean, it's not the end of the world. It's only one quarter, but they missed EPS. They did 24.62 or $24.62 versus 26.11. So that was an initial shock, I guess. The stock did come down once these numbers came out, literally the second these numbers came out about, and then following, a couple minutes after, we got down about 22.25, and we closed at 23.90 today, so that's a big drop. But they did beat on revenue, barely, guys. $68.01 billion versus $68 billion flat estimated, so they missed EPS, beat revenue, and the board authorized a repurchase of up to an additional $70 billion of Class A and Class C shares, so more buybacks, which is great. They have so much cash, guys. These companies, big tech companies, they have so much cash. They do not know what to do with it, so they're going to buy back more stock. Perfect. I like hearing that. YouTube ad revenue came in at $6.87 billion, which I'm super bullish on YouTube, guys, hence why you're watching this on YouTube. I'm on YouTube, and I think over the next 3, 5, 10 years, as long as YouTube remains on top, which as of now, it's clearly on top when it comes to longer form content, and honestly, it's competing with Netflix, Hulu, all these big streaming players at this point as well. And I think YouTube's top 3. Even if you're looking at streaming services, that's just my opinion. And I think that growth is going to continue as YouTube continues to expand, which it is going to continue to do that, guys. And Google ad revenue came in at $54.66 billion, cloud revenue $5.82 billion, and it shot up. Initially a dump, like I said, but after that, it shot up. I'm assuming this is because of guidance. Let's see here. Actually, it might not be guidance. It might not be guidance. I'm not seeing anything on here. But overall, it could have just been an overreaction. I mean, this thing dropped 7%. I don't think that report warranted a 7% drop, especially because Google was already in a bear market heading into this report. I'm not sure if you guys realize, but Google was down 22% heading into the report, and for it to drop another 7%, that might have been a bit extreme, and now we're getting that rally. But don't get me wrong, we're still down. We're still down $90 after market hours, which is about 4 or 5%. I'm not sure exactly, but I'm kind of eyeballing that math there. So Google's still down a little bit, and I do have some, cash in my account. I'm probably going to buy some more Google in the next day or two, right? Probably in the next day or two, I'm going to add to it because, like I mentioned to you guys, once the numbers came out, and if we broke under 2,500, I mentioned this a couple of videos ago, I was going to end up, I was going to buy more. And here we are, that happened. And let's see if it, continues to drop. And it could be the right time to, start adding some more shares, start building out the position even more, heading into that split, which is in about 2.5 months from when we're filming this video. So Google, not the best report. They missed EPS, but it wasn't a disaster whatsoever. It was just one of those quarters that you can kind of brush over it, and we'll see what happens next quarter. And I'm going to dive deeper into the report, and I might even make a video on it. Let me know in the comments if you guys do want me to make a video on the earnings that just came out. Obviously, I'd do that tomorrow, not today. I mean, it's going to be nighttime when you're watching this. I'll do it tomorrow, or maybe even the next day. Let me know your thoughts. Well, probably tomorrow because the topic would still be hot. As the days roll on and on, it becomes old news. Nobody cares anymore. You guys know how that goes. So that's Microsoft, Google, the two big dogs, which Microsoft's ripping. Google is trying to get back to break even. We'll see. So not too bad in terms of the price action. Visa on the flip side, if I actually, let me not clear this because you guys can see we still have a head and shoulders here. Visa went down 4.2% on the day, but it went up to $210 after market hours after closing at $201 a share. So essentially, Visa, it recovered all of that loss from today in the aftermarket hours. They did EPS of $1.79 versus $1.65, so they crushed EPS, and they ended up crushing revenue, $7.2 billion versus $6.84 billion, estimated. Not too shabby for Visa, guys. And if you guys take a look again, we have a head and shoulders clear. We have the head, or the left shoulder here, the head, the right shoulder, and with today's aftermarket run-up, we're not out of the woods yet. Believe it or not, we are still under both moving averages on this 4-hour chart. We're still within the head and shoulders in the right shoulder here, and we're about to get potentially a death cross. The 50's awfully close to crossing under the 180 SMA, which I am not very I'm not liking it. Let's just put it that way. I'm not very fond of that. So let's see what happens at about, let's say, 220, 230. That's seriously, that's the spot where Visa could really start turning around, but we're just not there yet. So for that reason, I'm going to be patient, and I might just put an alert at, let's say, 215 and just see what it does from that point. Another company that reported, guys, is good old Enphase, ticker symbol ENPH. They did EPS of 79 cents versus 66 cents estimated, which beat, and they did revenue of $441.3 million versus $432.1 million estimated. So they beat EPS, beat revenue, and they guided up, which, guys, when it comes to these growth companies, smaller companies, when they guide up in terms of revenue, that's amazing. I mean, that's the best thing in the very short term for the stock at least, and obviously longer term for the business. If they keep guiding up and they keep hitting numbers, that's good for the growth long term. But in the short term, again, when companies guide up, that's very good for the bulls, and they see Q2 sales of $490 million to $520 million versus $474 million. So the low end of the range is higher than the estimate, which is great. And obviously 520 is way higher than the 474 million estimate, and that is the higher end of the range. So Enphase, as expected, is up $10 on this earnings report after market hours, which in percentage terms, that's about 6-7%. Really not too bad. And I think earlier it was up about 9 to 10%. So it is down a little bit from 171 to 163, but overall, it is up after hours, which is fantastic, and it seems like the uptrend is continuing on the 4-hour chart, and we are getting a bit of a death cross, which is not good, but if this could break out of, let's say, $180, $185, that is where we could end up seeing a real reversal, and that's right by the moving averages. So I'm going to put an alert here. Mark is at or above 185, right by those moving averages on this 4-hour chart. Chipotle, let's pull up Chipotle, guys. CMG, they did adjusted EPS of $5.70 versus $5.65 estimated, and revenue of $2.02 billion versus $2.01 billion estimated. So nice double beat for Chipotle, and they see Q2 comps growth of 10 to 11% year over year, and they see opening about what is this here? They're opening about 235 to 250 new restaurants, which, if you think about it, that's a lot of restaurants. But they're continuing to expand, guys, which is great. And the stock is moving up on these earnings. They closed down about 5% on the day, closed at $1,438. Now they're up to $1,518, which is a percentage move. Let's see here. That's got to be at least 5%, right? It's got to be. Yeah, literally about 5%, a little bit over 5% is what Chipotle is up right now. And let's see on the 4-hour chart again where we are in terms of these moving averages. So what makes me nervous is, okay, like some other stocks we talk about today, this one's still technically in a downtrend. So we got to break out. There's a reason why my alert says 1650, guys. We got to break out of that point, which, if you take a look, has been resistance all of 2022. Literally this whole year, we have not gotten above 1650, other than maybe the first 2 days of the year, and that's when we were, selling off like crazy, so I'm not going to count that. But overall, 1650, we got to break out, and at that point, we could get a move towards 1900 again, in my personal opinion. So let's watch out for Chipotle. And the last two, make sure you guys smash the like button if you're still watching. I appreciate you all. And make sure to subscribe if you haven't done so already. I appreciate you guys for that as well. Let's talk about Texas Instruments, which this stock is cratering today. It is not looking good. It closed down about 3% on the day, right around $168 a share. And on the intraday chart, you guys can see after those earnings came out, we went down to 153. So this thing dumped 8% like that in the snap of a finger, and that's on earnings of $2.35 versus $2.18 estimated. So they beat EPS, and revenue came in at $4.91 billion versus $4.74 billion estimated. So funny thing is, they double beat, but the stock is getting destroyed. It might be a guidance thing, guys. Let's see. Here it says they see Q2 revenue of $4.2 to $4.8 billion, EPS of $1.84 to $2.26. Let's see here. I'm not sure what the estimate on that is. Actually, no, wait a second. I see it here. That's what it is, guys. Boom. There we go. Q2 sales. Again, I said they see that between 4.2 to 4.8 billion versus the 4.94 billion estimated. So that's a big miss on Q2 sales guidance, and also Q2 EPS guidance missed as well. So not good at all for Texas Instruments, guys. and we got to play it accordingly. Do not fight the trend. This thing is tanking. It's a falling knife. We got to be careful. And now with that earnings report, we took the lows out from, when were these lows hit? Back in February, early March. So that is not good at all for Texas Instruments. And let's see UPS, which is the last one. This one reported in the morning, guys. The stock went down 3.5% on the day. They did Q1 adjusted EPS of $3.05 versus $2.88 estimated. Revenue came in at $24.4 billion versus $23.79 billion estimated. So double beat for UPS. And they're also doing a share buyback program in 2022, guys, of $2 billion. So they're going to be buying back their own shares. And what was the one that had an inverse head and rather a regular head and shoulders? It was Visa, right? You guys see Visa, head and shoulders. It's the same exact thing here for UPS, head and shoulders, right? We have the left shoulder, head, right shoulder. We're under both moving averages. We have the death cross, and this one's getting awfully close, in my opinion, to completing the right shoulder. I mean, we might have already done it at about 175, 180 here. The stock's at 183, so we might be getting a rally soon, very soon, in my opinion, but we're not getting confirmation of that quite yet, so we got to be careful with this stock. But let's say it starts breaking out of 190, 200, that is where we're going to start getting the rally. So watch out for that when it comes to UPS. So I guess that's it, guys. I guess that's it. If you enjoyed the video, make sure to hit the like button, subscribe, drop me a comment, let me know your thoughts, join my Patreon, do all that good stuff. And I can't believe we got through the day today. Today was an absolute freaking bloodbath. So with it being a bloodbath, you might as well get some free money from Moo to compensate for that. You get up to 6 stocks, each up to $3,500. Just use that link down below. Deposit at least $100 or go to stocksurfest.com/Moo, MOOMOO. Deposit at least $100 and boom, you get your money. And with that being said, cheers, guys. Sipping a little Diet Coke. I'll see you all in the next video. Peace out.